really just trying to figure out if the interest rates are higher or lower if you have a credit score or not. Hey Finance Fam, Nikki here with another video, and today's video is going to be extra special. I'm probably going to get extra heated, but we'll see what happens. So I'm going to be reacting to a video that was brought to my attention, Dave Ramsey video. Obviously, Dave Ramsey has helped a lot of people get out of debt and reframe their thinking about money, but not everybody in the finance industry, especially professionals specifically, agree with a lot of the things that he says. So let's see, what comes of this. The last video that I did, it was a reaction to him saying that nobody should ever use rewards credit cards, and you've probably seen that. If you haven't seen it, check it out here, and you can see how I've responded to that. Now, this person asked, how am I supposed to build credit without using credit cards? So I found this to be a very valid question, and I was very excited that somebody asked this to Dave. Let's dive into what he says.
Yehuda is with us in Baltimore. Hey, Yehuda, what's up?
Hey, how's it going?
Better than I deserve. How can I help?
Good, good. I have a quick question for you. I know you're not a fan of having a credit card. I've heard you say that many times.
Right.
I was just wondering, how is someone supposed to build credit without using credit cards?
Why would you want to build credit?
So don't you need credit to get a mortgage?
Oh, so you can go in debt. Okay. Actually, you don't.
Well,
to get a mortgage.
You don't?
Why? If you could get a mortgage without building credit, why else would you build credit?
So that's a good. Can you get a mortgage without building credit?
Yeah, I'll tell you how in a minute. But if you could get a mortgage without...
Why would you need a mortgage? Oh, I don't know, because I don't have $500,000 right now to spend on a house.
Building credit, and you had a 0 credit score, is there any other reason you would want to build credit?
Not particularly.
Okay. Because really, the thing of building credit is a thing invented by the banks, because basically it works like this. I'm going to go into debt. Why? So I can build credit. Why? So I can go into debt. Why? So I can build credit.
The reason that, banks care about credit, this isn't like, God, look, not everybody has enough money to be able to do things like buy a vehicle, buy a home. I know that that's like Dave's way, and he says that you should not take on any debt, pay cash for your home, always use a debit card, which, by the way, is definitely a fraud risk, using a debit card that's tied to your actual cash versus a credit card that actually you can file fraud and them not have access to your cash. But that's a side note. So it's like, we need banks to be able to lend us money, and banks aren't just going to willy-nilly lend money. They have to know, you have to prove to a bank if you want to get a loan for a home because you don't have the money to pay for it cash. If you want to get a loan for a car because you don't have the money to pay for it cash, the banks have to be able to assess the risk that they're taking on by lending you money. If that wasn't the case, then these banks would be in deep crap and they wouldn't ever lend money, and none of us would ever have things, because most Americans have to take on debt in some way, shape, or form. So yeah, we need credit.
Why? So I can go into debt. Why? So I can build credit. Why? Because I just love banks. That's really what the whole society has turned into, if you think about it. And so you can get a mortgage with a 0 credit score if you go to a mortgage company like Churchill Mortgage that does what's called, or was willing to do, what's called manual underwriting, which means they verify your job, they verify your income, they verify your savings position, and they'll verify that you paid your landlord early or on time. And with 0 credit score, you can get the same interest rate, the same mortgage as someone without. But you have to have a mortgage.
Oh, you can get the same interest rate? I find that very difficult to believe, that a no credit score mortgage is going to give you the same interest rate versus somebody that has a good credit score and good credit history. But I'm going to end up diving in a bit deeper on that. If I have a good credit score, would I get a better rate than using the no score loan or the no score mortgage? Look, there are so many reasons why you need to have a credit score. Some landlords, they check your credit and they want to see a good credit history to be able to rent to you. And guess what? If you don't have the money to buy a home in a lump sum, you're probably going to have to rent. And if you have to rent, you need to have credit, because not all landlords are going to allow you to rent without credit. Some may not, right? Depends. You need good credit to avoid things like security deposits for utilities, for your electricity. You can avoid paying, a couple $100 or more security deposit depending on where you are. You need good credit to be able to get a good interest rate on your home mortgage, on your auto loan, because you may not have the cash to be able to pay for all of this in full. Guess what else? Car insurance rates. Your car insurance, they may pull your credit and they may give you a rate depending on if you have good or bad credit. There are multiple reasons why somebody would want to have good credit. And for Dave to make it sound like, oh, why would you want credit? Why would you need credit? The banks. And he's like villainizing the banks, which the banks definitely have their issues, no doubt. 100% agree with that. But at the same time, he's making it sound like it's this simple life to live with zero credit score or no credit score or a bad credit score. And really, having good credit does make life a bit easier and a lot cheaper in terms of what you end up paying over your life in interest and deposits and things like that. I think that that's an important thing to keep in mind if you're thinking about utilizing this strategy of having no credit score. You do need credit. And I don't really care what Dave says. You do need credit. So Dave talks about this Churchill mortgage company that does a no rate, no score mortgage. So they'll look at other things. They'll look at, your income. They'll look at your payment history, if you have payment history, etc. They'll look at how long you've held your job, etc. They'll, look at all of these other things and not your score, and they will basically give you a mortgage based on that instead of your score. Look, that's all fine and dandy. There have been people that have done this. But one thing that I find interesting that I want to find out about more is, obviously Dave is associated with this company. It's all over their website. Hey, Dave Ramsey viewers, welcome. It's all over the place. So he's obviously very associated with this company. And one thing that I found when I was trying to dig into their website to find more information about the rates that they offer is they don't post their interest rates online at all. Now, many banks or lenders, they will post their interest rates, their current interest rates. There's a disclaimer and it's like, okay, rates will vary based on your credit score, but they'll at least give you a range of what the rates look like. And right now, rates are pushing 4% plus for a 30-year fixed. This company pushes a 15-year fixed. The reason they're doing that is because they want you to pay less interest and get your loan, your mortgage paid off in a quicker amount of time, but that leads to a higher mortgage payment. If you go 15-year versus 30, you're going to have a higher mortgage payment. Not many people can take on that extra cost of a 15-year versus 30-year, but that's apparently what they're pushing. Now, when I tried to find their rates, they clearly stated it here that they do not post their current rates on their website. I find that sus as you know what. So I want to actually contact them and see if I can get them to tell me what their rates are. So it says right here, when you see mortgage rates listed on lender websites, they are just estimates or quotes, which is exactly what I just explained, and that's true. And they'll vary based on your unique situation. For that reason, we do not post interest rates online. We have found it can be misleading and confusing for our clients. I find this super, super sus that they will not post their rates and they're framing it in this way. Because what that tells me is that there's a very strong possibility that somebody with a no score mortgage is going to be paying a much higher interest rate than somebody with a good credit score, which is completely, I would think, opposite of what Dave wants to happen, right? You would think that he wants people to pay less interest, lower interest rates, yada, yada, yada. He hates high interest credit cards, blah, blah. But yet he might be leading people to be doing something that's going to actually cost them more in terms of the loan. Now, there's other things to think about, like what they're charging to originate the loan. So there are more fees on top of just the interest rate that you're paying that you have to keep in mind when you're taking out a mortgage. So I wonder if I can give them a call. Let's see.
Thank you for calling Churchill Mortgage. A member of our team will be right with you.
The hot months of summer bring...
Hey, I just have a general question for a loan officer. I'm a financial planner. Is there a way to speak with somebody?
Hey folks, Dave Ramsey here. The only mortgage company I trust to help you achieve debt-free home ownership is Churchill Mortgage. Free home
Very
ownership.
associated.
Like me, they believe it's possible.
Good. I really just had a pretty general question I'm hoping you can answer for me. I am trying to figure out if I have a good credit score, would I get a better rate than using the no-score loan or the no-score mortgage? Okay, so here's the skinny. I recorded this conversation, and the loan officer told me that yes, someone with a good credit score is going to have not only a lower interest rate than someone with a no-score loan, but also it's going to be an easier process. I cannot actually disclose this full conversation, but I did have a direct conversation with the loan officer, and this is what was said to me. So, okay. So basically for a 15-year, it may not make a big difference because you're getting paid quicker. But for a 30-year, the no score may pay a higher interest rate, or likely would pay a higher interest rate. You guys can call Churchill Mortgage for yourselves, and you can have this same conversation and ask them the difference in rate between a no score versus having a good credit score. So, oh well. Okay. So now that we know that somebody that has good credit is going to get a better interest rate on a 30-year fix than somebody who has a no score or they're getting a no score mortgage, now that we know that, he made it sound like it's about a 0.25% to 0.5% difference. I find it hard to believe that that's the case for many people. You would have to have a really solid job. You would have to have great consistent income, high consistent income that's going to more than cover the mortgage. And you're going to have to show a lot of really good things to be able to get an interest rate that's even close to someone that does have a good credit score. If you don't have those things, if you maybe don't have as good of a income history, solid job, things like that, your income maybe isn't as high, things like that, I don't even want to know how much higher the interest rate is for somebody like that if they do the no score versus, having a good credit score. I don't even want to know. I imagine it's definitely much more than 0.25% to 0.5%. So let's dive into what 0.5% will actually cost you over the life of a 30-year loan. Because he said, 15-year, it's not that much of a difference, if any, which I cannot confirm or deny that. But for a 30-year fixed, he was very clear. He was an actual loan officer. He was very clear that someone with no score is going to pay a higher rate. So we'll go with that 0.5%. That feels a lot more likely to me. So we'll do a $400,000 home because if I go over to Y charts, you can actually see that the U.S. existing home average sale price is around $370,000, and then for a brand new house, it's going to cost you on average $511,000. So I figured we'll kind of, find that happy medium. But this is staggering to see, how housing prices have actually moved over the decades, especially so significantly for new homes. If you want to buy a new home right now, average sales price is $500,000. Not many people have that in cash to be able to buy. So let's just go with a $400,000 home and a down payment of 20%. If you're a Dave Ramsey follower, I imagine that's what you're going to have. And, he said low 5s to 5.5 interest rate. We'll start with the lower interest rate. So he said 0.5%. So we'll call it a 5%, right? right? He said high 4s. So we'll call it a 5% interest rate, which is probably pretty reasonable with rates are right now for mortgage rates, which I'll actually, add that on here so you can see 30-year mortgage rate right now. Looks like we're at about 4.5. Yeah, I would say people are probably hitting upwards of 5% pretty easily depending on your credit. I'm not going to throw in any property taxes or PMI or anything. I just want to get to the principal and the interest, and that's really what I'm trying to compare. So if we do $400,000 and we're going to go with that 5% interest rate to start, and then we'll bump it 5%, and this is going to be a buy, and we'll hit calculate. So total interest paid over the life of the loan, $400,000, 20% down, 5% interest rate, 30-year fixed. That's going to put us at interest paid over the life of the loan of $298,000. So now let's bump this up to 5.5% and see how that changes. So we're going 334, 298. So we're talking about $36,000 more over the life of the loan. If you have a no score, you're paying $36,000 more over the life of the loan. Now, think about what $36,000 could be doing for your finances, right? You could be investing that money instead, earning 8% interest on it instead of paying, mortgage interest on it. Some people may call this not a big difference, but $36,000 over the life of a mortgage, I think that is not something to balk at, and especially someone like Dave or someone like a Dave follower, I would think that would matter to them, especially being so debt conscious and pay everything in cash, right? I would think. So in my opinion, having good credit and being able to have that lower interest rate and save over $30,000 over the life of a loan, I would rather take that deal and take that $36,000 and get it invested over the life of the loan, right? Compound for me, not against me, if I have the choice. And in the situation where you're talking about your credit, you have the choice. Like, you can have and build good credit, and you can avoid on your loans having to pay more interest over the life of the loan. So I think that is important. I'm just going to use my financial calculator here to make sure that these numbers are correct, because I'm a nerd like that. Interest paid, $298, $418, exactly what I've got here. So I just always like to double check things because I'm just obsessed like that. So yeah, that is absolutely correct that you're going to be paying about $36,000 more over the life of the loan. So look, do you want an extra $36,000 in your pocket? I don't know. Ask yourself that. I think that this kind of shows the point that maybe it isn't such a bad idea to have good credit so that you can get the best interest rates, so that you do pay the least amount of interest over the life of the loan, and you have better finances for it, and you invest the difference that you make from having a good credit score. So that's my opinion. I know everybody has different opinions. Some people will probably yell at me and hate me because they love Dave and they love his strategies and how he thinks about money. That's totally fine. That's not how I think about money. I completely and utterly disagree with him saying that you should not consider your credit score. I think that it can help you in life and make things a lot easier. Even the loan officer said, yeah, the mortgage process, if you have a good credit score, is going to be a lot easier. When you do manual underwriting with no score, they're going to need a lot of documents, they're going to need a lot of stuff, and it's probably going to take a lot longer. So there are benefits to having a good score. Okay, I'll see you guys next time. If you like this video, let me know. Hit like, hit subscribe if you're not subscribed to my channel, please. And hopefully I can continue to give you my insights, and you can learn a thing or two from them and better your money along the way. I'll see you next time.